All right, traders, we are starting off the week very, very strong in the green. I ended up making a little over $7,000 in profits. The vast majority of my profit came from all call options trading the trend. If you watched yesterday's video, we made it very, very clear about our key support level. Within my watch list, I made it clear as well. 435.60. This is the key level where we can bounce from. The reason and how we came up with 435.60 is because last time, if you looked at the daily chart, the bulls got trapped at $444. As you can see right here, the bulls got trapped at $444, right? See all the little bull traps at the resistance, and this previous support towards 443.50 reacted as a resistance. Well, where did it bottom and where did the bears get trapped? And you would want to know that because SPY has been on an overall bullish trend throughout the past month. So we need to know the level where it's most likely going to bounce. And this was the exact bottom on the day. And this was the level that I gave you guys yesterday, which was the low of this daily candle. This is where the bears got trapped after the nice bull trap from $444. The bears got trapped at 435.61, and SPY had a massive move to the upside all the way to 439.75, and it ended up exploding the next day as well. So was there a bullish confirmation in terms of trading what we see at this level? Because thanks to the daily chart and thanks to trading what we see, we were already 10 steps ahead of retail traders because we knew about 435.60 because like I said, the bulls got trapped at $444 and then it bottomed at 435.60 to push higher. Therefore, the best potential level for calls would be where the bears previously got trapped at 435.60. And you could just visually see there is also key, very strong, heavy support at 435.60 right here to explode up to $444. So if you see a bullish 30-minute green candlestick at our key support level where the bears got trapped for the initial move, you better believe my team and I was pushing calls. The vast majority of my profit today came from calls. I did not do puts once after 10:30 a.m. and I'm extremely proud of that. All of you who were bearish, did not read the chart, did not read the daily chart, did not trade what you see, did not read the 30-minute candlestick. I also talk about this all the time, how in terms of when SPY forms these wicks on a green bullish uptrend, you see the top wicks, of these candles. What does it like to do? I talk about all the time. It likes to spike back up to the high of these wicks, and it just kept on spiking above those wicks, right? This was so predictable and such a valid confirmation. If you ended up catching the meat of the move like I did, I ended up having over 5 trades on calls, not buying the breakouts into this, buying the nice pullbacks, buying the nice dips, and I was bottom ticking and I was timing it perfectly. I did it 5 times in a row, man. We absolutely crushed it on the call side. And like I said, I did not do puts once. And for those of you who are doing puts during this, you're not studying. There's no reason for puts. Last time, the bears got trapped at 435.60, and it ran to almost $440. There's a gap to fill above at 439.46. Why would you do puts when SPY is gapping down, hitting our bear trap level at key support with nothing but green bullish 30-minute candlesticks? For those of you who are trying to catch the top and ended up making some profit, towards puts at 438, good for you, but I have no interest in making money against the trend. Now, you could say, the trend was technically bearish at 438 because that's where the day's highs were, but it already played down in a sense. But if you're seeing some bearish confirmations on the 30, you got a trend reversal 30-minute here, you got a red bearish candlestick here. If it wants to retest, then by all means go for it. But you need to understand the bulk of the move was in calls, and that was the trend past 10:30 a.m. You should not be put focused trying to catch the top. And if that's truly what you desire to do, at least aim for one of the best levels, which would be the high of day on the day, 438.20, where a massive bull trap was triggered, or target the gap at 439.46, right? But you need to understand, man, how to trade and take advantage of that overall trend. And this is something that we did a very, very good job for preparing in yesterday's video if you actually watched it and considered our level, because this was a very nice green bullish 30-minute trend reversal candlestick exactly at our key level. And like I said, I hit calls 5 times within the span of a couple hours for all wins, racking up a $7,000 profit in total. I only had 1 trade on puts. It was a quick win. If I would have held it for a longer period of time, I would have done extremely well on the put side, but I only did puts once. It was a nice quick win for a little bit over like $1,000, and I did it right here towards the exact top when this was at 438. The reason why I did it, it's just the trend looked overall bearish at the morning, but it was just a quick scalp and I was in and out. But those were the overall trades that were made. Now, in terms of some trend and pattern recognition, I'm going to bring some awareness to this. Let's see if you guys ended up catching any of these type of moves here. I'm going to be explaining to you on some other ways on how I determined that the 30-minute chart was actually going to be bullish. I'm going to share with you some trades right here. So take a look at this pattern. This is very key. Take a look at this. You have this red bearish candlestick, you have this red bearish candlestick, you have this green bullish candlestick, you have this green bullish candlestick, you have this red bearish candlestick, right? So you see that, and then you have this red bearish candlestick. So you have a red, green, red. You have a red, green, red. Then you have one more 30-minute red candle, then you have one more 30-minute red candle, and then what happens on the next 30 minutes? The next 30 minutes, it bottoms at the previous 30-minute lows. You see that? And then it flips super bullish. So when I saw that pattern form, and this is why I told people I'm going to hit calls heavy at 3:30 p.m. When I saw that pattern form, I was hitting calls because I recognized this red, green, red pattern, and I was noticing that SPY was on that bullish reversal since our key level, and it was just extremely bullish, and all of the dip buying opportunities with the trends were just banking. You had so much support down here as well. So I ended up playing calls for that reason, catching that red, green, red, red pattern. And then on the next 30-minute candle, it flips super green. So you just buy it towards the previous lows because that's where it bottomed last time. And you could see if you were to buy it towards the previous lows, which was right here at 437.17, I was hitting it at 437.30. If I wanted the best entry, I could have aimed for 17. But literally my entry was almost the lows. I was hitting it in the 30s. The low was at 10. It went all the way to 438. See, that's another 30-minute pattern that I captured. So let me know if you caught that one, because that's the one that I caught at 3:30 p.m. and that was sick, man. Everyone was so bearish. The guy who voted red in the chat, he was the one who was bearish as well. I was telling them all, it's gonna flip bullish. It's gonna flip bullish. It didn't repeat to an exact T. You can see right here, it ended up closing strong on the 30-minute with that pattern that I just explained to you. It ended up closing strong and green. It had the nice spike like I anticipated, but it didn't close strong and green. But I don't hold in hope. I sell and took my gains. When this went to 437.60, had a 40-cent spike basically for my entry, I locked in my gains and I locked in my profits. And then it went to 438, pushed a little bit higher, and then it sold off. But with that being said, man, those were the overall patterns and trends that I wanted to bring awareness to. When SPY is hitting a key bear trap level for the first time, where these bear traps have been getting set, and you are seeing nothing but green bullish 30-minute candles, you need to stay away from put options and you need to look for opportunities to buy the dip on the bullish uptrend. So remember, the trend flipped bullish on the 30-minute. Towards our basically exactly at our key level. So one way that I like to play it is looking at more 30-minute patterns. And another way I like to play it is I wait for it to break above resistance. And when it breaks above resistance, I look for it to pull back to the previous resistance level. And then I buy the dip at the previous breakout level on the 1-minute chart where the bears previously got trapped. That's what I like to do. And that's how I personally like to ride the wave in a sense. For example, there's some resistance at 437.30. It has a little drop. Once it breaks above resistance, buy the retest at the previous resistance and then sell the rip. That's how I kind of like to ride the trends. And that was working for the vast majority of the day. But I like to do it on overreactions, big pullbacks. But that truly isn't my favorite thing. My favorite thing are these 30-minute patterns, man. These 30-minute patterns are so predictable. I showed you two. I showed you the one at 435.60 right here. That's green and bullish. Also, SPY loves retesting the high of the wicks. So that's more reasons to be buying calls. And I showed you the red, green, red pattern, and then it flips green. We discussed that one as well. The red, green, double red, and then it flips green pattern, that worked as well. Now, let me just double check this chart here because this looks completely different to me because I make all these trades on my phone. There was one more trade. I did calls. I crushed calls on this 436 move. I told everyone right here when this was in the low 436s on this 30-minute, I told them it's going to go to 437. And nobody believed me. Most people didn't believe me. I literally told them it's going to go to 437 within the next 15 minutes. I'm pretty sure there was another pattern on the 30-minute chart that told me that that exact move was going to happen. I remember on my phone, that's basically what it told me that it was going to do. I know right off the bat, one of the reasons why I said that is because this previous support hasn't been tested and it's likely going to try to test, and it kept forming bullish green 30 minutes at our key support level. But also it's going to try to spike back to the high of the wicks. but I visually remember there was some sort of pattern that I was seeing in the 30-minute history as well that was basically telling me that this is gonna spike. You could say this is a similar type of move as well, this type of move right here. But for the most part, man, this as well here, you can just see, man, this is it. This is it. Take a look at this. See, I just found it. You see, it takes a minute to find because it looks a little bit different to me on the desktop here. But take a look at this. Take a look at this, man. This is sick. Look at this pattern. This is another one that led me to be green and bullish. So keep in mind, in chat, I said we're going to 437 when we were at 436. I crushed on calls. So many people were shocked, and they were also shocked on the one that I did into market close. Take a look at this. You have this green bullish candlestick. Look at this, man. Are you seeing this stuff? Because I'm seeing this stuff in real time, and I'm calling this out in real time. Every single trade I make is timestamped within this chat, man. It's unbelievable on how we're crushing this. Green bullish 30-minute, green bullish 30-minute. You see that? And then look, you have these like two trend reversal green dojis with the top wicks, right? You got two of them in a row. And then you got these two green bullish trend reversal 30 wicks. You got two of them in a row, right? And then what happens on the fourth green candle? A massive breakout. You see that? You see the massive breakout? I caught that, man. I saw these patterns. So I just showed you 3 patterns. How many did you catch? I'm looking at the 30-minute chart and I'm saying, okay, is there anything that looks similar throughout the history? And then if you're wondering, well, how far do you go back throughout the history? One tip I can give you is short-term history tends to work the best. In terms of win rate and accuracy, it tends to work the best. But if I don't see anything and I'm at a key level I like and I want to see something, I'll go further back. But I would say 10 days, the 10-day 30-minute chart, but you can go as far back as you want and just look to see if there's some sort of pattern. Look at this, man. Green bullish 30, green bullish 30. 2 uptrending wicks. It retests the wick, it retests the wick, retest the wick, retest the wick, and then it explodes up, breaks out, explodes up, breakouts. I shared with you 3 patterns. How many did you catch? Just to quickly recap. The first one was the green bullish 30-minute candle for the beginning of the reversal and uptrend at our key 435.60 level. The second one was this right here, green bullish candle, green bullish candle. You have 2 sideways uptrending top wicks, and then it explodes up on the next 30 minute. You have 2 sideways uptrending wicks that explodes up on the next 30 minutes. And then this was the one, so many people doubted me on this one as well. This was the one right here. And bears don't see this, man. They're fucking blind. Believe me, I have them all in my chat. I have like at least 50% of the fucking people in my chat were all bearish on this. I'm like, open your eyes. Look at the 30-minute patterns. The 5-day 30-minute chart gave me 3 trade ideas on calls. This was the third one. Look at this. You have red, green, double red. You have red, green, double red. You see that? Red, green, double red. Red, green, double red, right? What happens on the 5th 30-minute? Green and bullish. Where does it bottom? At the previous 30-minute lows. What happens on the 5th green 30-minute? It goes super bullish, and it bottomed at the lows of this. That's how I was able to get in at such a great entry. And bears just didn't see this stuff, man. I'm telling you, I'm like, what are they looking at? They're saying EMAs, they're drawing these downtrend lines. I'm like, what the fuck are you looking at, man? So that's the game, man. And that's what I wanted to put on to you guys. You need to focus on the 30-minute chart, and you need to focus on the key levels with the 30-minute chart. There was no reason for anyone to get caught up into puts with this. If you would have understood 435.60 bullish confirmation, no reason for puts with the first green 30-minute candle. And if you also would have just noticed this pattern, it's as clear as day. Look at how clear this is, man. Green and bullish, 2 uptrending dojis, super green bullish breakout, right? You need to learn how to identify and capture trends. You need to trade what you see, not what you think. We can see patterns, but we need to see confirmation of these patterns repeating itself. And you need to go back and study the past and capture these trends and capture these patterns. I shared with you 3, and that's how I catch them. You don't need to know the name of these candlesticks. You just need to know what is going to visually happen when these candlesticks form in a certain way, in a certain pattern, in a certain trend, at a certain key level. You need to understand the most likely outcomes. With that being said, that's how I crushed on the call side. And I really would encourage you to just focus on trading what you see and trading the chart along with the 30-minute chart, because it's getting to a point where losing is truly a choice. It truly is a choice. If you are trading the overall patterns, and you need to be disciplined and very self-aware and understand if you're not seeing anything, then there is no trade. If it's not at a key level, then there is no trade. If there is no strong confirmation on the 30-minute, then there's no trade. You need to understand these things and be disciplined and let the trades come to you. Let the patterns come to you. So this extremely bullish breakout right here, that took an hour and 30 minutes to develop. Green bullish candle, green bullish candle. 2 sideways uptrending wicks, 2 sideways uptrending wicks. That's an hour and 30 minutes. Now, if you looked at that hour and 30 minutes right here, and then you compared it to this hour and 30 minutes here, you would have said it's going to have a bullish breakout. It's going to have a bullish breakout. But it took an hour and 30 minutes to have confidence and to confirm that that was going to be a bullish breakout. There was no confirmation that it was going to have a bullish breakout up until those hour and 30 minutes. You must wait for something to develop. Wait for a key level to hit. Wait for a bullish or bearish confirmation on 30 minutes. If it's trending up on green bullish 30-minute green candlesticks, why the fuck are you doing puts? At least wait for a key resistance level. At least wait for it to retest the high of day. At least wait for a 30-minute red bearish candlestick. Just look at it, man. This isn't rocket science. Every single time almost, it's forming green bullish 30-minute on the green. It just keeps on fucking going up until it gets some sort of red candle or hits some sort of key resistance level or some sort of initial reaction that has not been tested. So just make sure you guys understand how the game works, man, because I'm putting you on to it. With that being said, what's our game plan for tomorrow? So let's just take a brief look at the daily chart. So SPY has a gap down in terms of understanding what is going on. We topped at the key $444 level, which created a micro bull trap. And then in terms of where we were potentially looking for a bounce for that bear trap to be created, and this is how we were able to crush it, is we went back throughout the daily chart and we figured out that, okay, this is where the bears got trapped at 435.60. So the bears got trapped here and then they topped it at 439.75. Right? So in terms of what is currently happening, history is currently repeating itself. Now, in terms of some differences, we have formed a much different daily candlestick. So in terms of, well, how does this look? So SPY was at major resistance. You know, we are pushing above 52-week highs. It's at major resistance. It did gap down. One thing I would encourage you to do is you can see in terms of when SPY forms a red bearish candlestick on the daily, it's double topping, it's at major resistance, and when it gaps down like this and then it forms this pin, you can look to see how it overall reacts, right? That's one thing you can look and study to see by going back further throughout the daily chart to help give you some sort of bias heading into tomorrow. But never blindly trade a bias or confirmation. Use a very, very valid confirmation. Don't trade a bias blindly. Trade what you see. So what we need to understand is, you know, we did bottom at our key level, which is what happened yesterday. And we do have a gap to fill above at 439.46. So basically what I can say in advance is I don't have too much of an opinion on how this daily candle looks. If you want to have more of a stronger opinion, you can go back, look throughout the 5-year chart, and just look for the same scenario in terms of how it looks right now. See if you can find something similar where SPY, you know, had some sort of double top or it had a bearish candle that looks like this, then it gapped down and formed a pin like this, right? And it looks red towards some major resistance. That's something that you can go back and do. This could be like one example right here. It forms like a red bearish candlestick. It gaps down the next day. It forms the pin and then it uptrends the next day, right? And then, well, where was the low? The low was towards yesterday's low. So let's just go with this for now. What we're going to be looking at are these levels. We're going to be looking at in terms of potentially for dip buying opportunities. Let's just take a look right here. So 435 was the exact low of day. A key level we're going to be keeping an eye on is going to be like this 435.50. We're going to keep an eye on 435.50, 435.50, right around that zone. See if it bounces there. If we're getting bullish confirmations on the 30-minute chart towards the lower end of this zone, 435 to 436s, if we're seeing green bullish candles on the 30, then we will likely be doing calls. Max pain is basically at the low of day. That's the max pain on that idea. Now, in terms of puts, we do have levels for puts. I'm going to give you 2 levels for puts. This one is not the best one. Just keep an eye on it. Take it with a grain of salt. 439.46, that's where the gap is waiting to fill, and that's where it could potentially have a small pullback, a small micro crash. But this is my true favorite level as of now for put options. If we go back to 442. 442 is a key level that was never really retested. You know, this was a level that just basically sold off and cracked from support. This is it right here. You could see there was support at $442. Once it cracked, it just kept selling off. It formed lower highs at 441.80. So it never retested 442, and there's a lot of resistance at 442. That is one of our key levels for puts. We will be keeping an eye on 439.46, but you must be extremely careful. If SPY is forming green bullish 30-minute on this zone, it's going to try to continue to fill the gap. It could reject initially once the gap fills, but if you ever see it break above the gap, 439.46, and they form a floor, it's going to go bullish. We're going to 444.2, and then we're selling off. That analysis I just gave you is prime. Just like yesterday's, man, this is great analysis. Now, in terms of more macro levels that we're waiting for, these are just macro levels. $450, just set your price alerts. Whenever it hits, it hits. $450 will be a level where I would blindly do puts without any sort of valid confirmation, with just anticipation that it would drop from 450, because this was one of the greatest bull traps that was created at $450, and it's due for a pullback at that nice whole round number. In terms of call options, if we were to go for a lower level, and this is more of a macro level, we love this level right here. This is the level we love for macro call options. We're keeping an eye on $430. $430 are great levels. Now, in terms of the macro levels, not only can you day trade them, you can also swing trade them. If you see a bullish or bearish daily candlestick at these levels and it aligns with our swing trade, so calls at 430, puts at 450. If you see bearish at 450, bullish at 430, you can swing trade it, but those daily candlesticks do not close until the market closes. So you must enter them right before the market's about to close, when the daily candle shapes itself and when it's validated and when it's confirmed. And that's my overall analysis, man. That's our game plan heading into tomorrow. We're going to be watching bullish 30-minute candlesticks for the lower range towards today's lows, 436 to 435. We're going to be keeping an eye on puts at 439.46, not the best level. It's towards the middle. Best level for puts is going to be $442. That's where we should see a nice drop in terms of the SPY. Now, in terms of lower levels, if we do end up blowing through $435 tomorrow, let's see, would there be any level besides 430 that I would be interested in advance? Let's take a look. I would say I would keep a very close eye on $433.50 and $432. That will be the zone. And remember, for these zones that I'm giving you, we need a validation. We need a strong confirmation overall. So that is our game plan. That is what you need to understand. History is trying to repeat itself. It's trying to explode up and fill the gap since it's been reversing at 435.60. We need to wait and see how it reacts tomorrow. If we're forming strong support towards this 436-ish level to 435.50, we will be interested in calls again. We're keeping an eye on 439.46 gap, and we're keeping an eye on 442 for puts. In terms of macro, we like puts at 450. In terms of macro, we like calls at 430. In terms of short term, if we do go super bearish, we're looking at calls for $432 to $433.50. With that being said, use the 30-minute chart. There was just with the 5-day chart, just with the 5-day 30-minute, just with the 5-day 30-minute, there was 3 very strong confirmations in trades to buy calls on the nice dips with the bullish uptrend. There was 3. How many did you see? How many did you trade? If you're not seeing them, if you're not trading them, then you need to open your eyes and get locked in. Figure out what platform you can visually see these better. Like I said, I visually see these patterns best on my phone. This video lesson would have been 10 times faster if I made it on my phone, because that's what I trade. I trade it on my phone. I see it the best on my phone. For whatever reason, when it's in a small screen, it's just so easy to lock in. And in my experience, I experience the highest level of focus when I'm on my phone. It's just so fucking addicting. It's very hard to get distracted when you're on your phone. If you're just using one app, you don't have notifications on, and you're just locked in, you're dialed into one chart, and you flip through multiple time frames, it's very easy to focus trading on a phone. Phone addiction is real. Like, people spend 10 hours on their phones, but they don't make any fucking money on their phones. Like, use your phone to make some money. And I'm telling you, I've developed a certain flow state, a certain special flow state of mind, to be able to read price action by using my phone. And that comes with time, and it comes with the right platform, and it comes with experience. But like I said, I've never experienced that type of flow state with reading price action on a desktop, on a bigger screen, on multiple monitors. Never experienced it. But when it comes to a small phone, just a normal iPhone, yeah, it's up there, man. There's nothing like it. It is truly unreal and incredible on how well I can read price action with the phone. I'm not saying for everyone to take that route. I'm just speaking from my experience, and if you ever wanted to experiment with that. It started from a very young age because when I was in high school, I didn't have access to computers, but I did have access to a phone, and I had teachers who didn't care, and I didn't care. So it made sense to just punt school and just to focus on stocks. But with that being said, if you do want to learn how to trade the best setups at the best prices, it's going to be the first link down below in the description. It is a one-time fee, and you get lifetime access to the entire program with InTrader Society, man. We're going to teach you how to trade the best setups at those prices. We're going to teach you how to identify and find your own key levels. We're going to teach you how to trade what you see, what to look for, how to trade what to see, not what you think, what to look for, the unique price action trading strategies that we've created. You're also going to get access to the price action trading strategies, the risk management, the position sizing, the psychology, the mindset training. All of the moderators and all of the networking opportunities are within the chat. You get access to asking me any question. And like I said, every single trade that I make is alerted in real time, and it's 100% real time. And for all of you who are watching my trades, meaning the moment I post it in the chat, you will see. Usually whenever I'm buying calls, it's into a red bearish 1 minute candle. You'll see it almost every single time, and then it quickly reverses and I bottom ticket when I'm right. You'll rarely see me buy calls into green candles and buy puts into red candles. You'll rarely see me do it. I have this edge with scalping where I understand where the reversals are going to get created, and I understand where the instant spikes are going to happen and the instant crashes are going to happen. Therefore, I'm going to be buying puts into green candles and calls into red candles so I get the best entry. We are 10 steps ahead of retail traders. Who called 435.60? Who called these 3 bullish patterns? We took advantage of all this, man. And I was truly laughing at the bears on the way up because I saw 3 bullish patterns. I saw nothing but green 30-minute on the chart, and I saw no reason for puts. It gapped down. It formed our bullish confirmations. What's the reason for puts? Why are you doing puts? Why are you scalping against the trend? Why are you celebrating a small, tiny win against the trend when SPY just went from 435 to 438 and you're trying to cherry pick a top? Are you fucking kidding me? Is that what you want to do? Is that the strategy that you want to optimize for? You want to try to cherry pick a reversal when the trend, you're going against the overall trend? The people who are making the real money are the ones who are trading the trend, not the ones who are holding with the trend, the ones who are trading the trend. You can scalp the trend multiple times. Holding a trend is extremely difficult. And use validated confirmations. But if you want access to the entire course, the entire video lesson library, the entire Discord chat, all my real-time trade alerts, the real-time voice alerts, the real-time, live trading streams, it is all in that first link down below in the description. You can get started right now. It's instant access. It is a one-time fee, and it is lifetime access. This is the best deal and the best price you will ever see it at. It's the first link down below in the description. I will see you guys tomorrow live at Market Open. We're going to absolutely crush it just like we did today.